So there's lots to get through in my September 2022 update of the best savings accounts. Loads of news to tell you about as well. I'll start there, then move on to some of the best rates. There's been a lot of movement, some really, really interesting, plus 2%, plus 3%, depending on what type of account you're after. Go those, and then also I'll share with you I think the top picks are the best places if you don't have your money in the right place right now, where you might want to move it to. We'll start off with news. I want to kick off with something around Chip. Chip is an app which I've been a big fan of over the years most of the time. They can be a bit kind of changeable in terms of exactly what they offer and why they offer it and how much it costs. The feature that I've loved from them from the beginning is their auto saving feature. The idea is you connect your current account to the app. It analyzes your money coming in, your money going out, and it works out how much you can afford to save every month, how much extra money that you probably won't miss it if it moves into a savings account, and moves it for you. And it can be a great way to kind of get in that savings habit without really thinking about it. So I've been a big fan over the years. As I said, in the past, they have changed their charges quite a lot. Most of the time it's been free. Sometimes they've charged for this feature. At the moment, it's free, and it has been free for a few months now. However, in the middle of October, that is going to change again, and they're going to start charging transaction fees on each of these auto saves. It'd be 45 pence per save. So let's assume one save is £22.50. Again, you might be higher than that, you might save less than that, and you can actually change the settings in terms of how much you save and how often you save. But let's say £22.50. A 45p charge works out as a 2% charge. So you're moving this money across and you're getting hit by 2%. The account currently offers 1.05%. That could obviously change, but effectively it means you're going to be losing money. And in fact, you'd have to have quite large auto saves to come across for that kind of interest to cancel it out. There's also going to be a new charge in terms of withdrawals. There'll be only 2 free withdrawals every single month. So if you're moving your money into this account as that autosave and then trying to like move them again on a regular basis to another account so you can spend those autosaves or to get a better interest rate, well, 2 might be okay, but it might not be. So heads up on that one. If you do use Chip for anything else or particularly for these features, then maybe it's time to look elsewhere, look for alternatives. And Plum, another app, and I have done a whole review on the autosave feature there you might want to check out. That one does still maintain a free autosave right now. There are paid tiers, but the autosave is free on all of them. So I would maybe think about moving over to that right now, early on, wait before it actually happens to you. Talking of accounts that you might need to take action on, if you have the Chase current account, you may also have activated the roundup feature. The roundup feature is a big fan of this in terms of lots of banks do this, and again, helping you save without thinking about it. But what's so good about the Chase one is it gives you 5% interest, which is probably better than you're going to get in pretty much almost any other account right now. Small amounts, but a large amount of interest. Now, what's interesting about this one is this account operates for 12 months. At the end of the 12-month period, the money you've put in this roundup pot, earning 5%, and the interest in there will be moved into your main Chase account. Now, that is a couple of things you need to think about here. One, make sure that money's moved over. Is there moved again? Maybe within Chase, 1.5% they're still paying on their account there, or maybe to a different account to get the best possible interest, or maybe you'll want to spend it. But even so, just be aware that it's been moved over. And 2, have a check on this. I don't think you'll have to, but you may need to reactivate the offer again for another year. I think they call the word reset it. So they move the money after 365 days, and then hopefully it will just carry on and you'll still be able to kind of round up on it. But just keep an eye on that. And if you are someone who, like me, opened up the Chase account in late September last year when it was launched, that first year could be coming to an end very, very soon. Incidentally, while we are talking about Chase, the rate is still 1.5%. We've not seen any movement there on that account. It's not trying to catch up with some of those others, as I say, are now past 2%, some of the top ones there. You'd have think they would have done something by now. I don't know what they're waiting for. There will be another Bank of England interest rate meeting in the middle of September. I think it's Thursday the 16th, I want to say, give or take. Potentially they're waiting to see what happens there, and maybe they'll go for a super duper increase or whatever. But at the moment, they are lagging behind massively. And this means a lot of people have been moving their money into other accounts, paying more money. There are, say, a number of these. In fact, there are so many different options that we can get more money than you can with Chase right now. Something you might not be aware of, and it's, again, not many people I think are going to fall foul of this. Only people with large sums of money. But there is a £25,000 limit in terms of how much money you can move out of that account on a daily basis. So if you do have lots of money in there and you're looking at moving it across to a better paying account, just be aware you're going to have to do it in those kind of increments of most £25,000. And also, I will talk about this when I do the current account update next week, but Chase has also extended the 1% cash back for customers who have had the account for a while now. So again, I'll talk about that in my next video. To make sure you don't miss out on that one, of course, hit that subscribe button and you'll get notified every time a new video is released. We've got a couple more useful things to talk about before we get on to the best accounts. One of them is around Cynergy Bank. Now, this one has often been at the top or near the top of the best buy tables for easy access accounts and cash ISAs. Occasionally, the fixes aren't too bad either. But we're talking here about the easy access ones where you can get your money in and out. You can move it. Often, when a new account is released with a higher rate, you would expect for you as an existing customer with these easy access accounts to just suddenly get that new higher rate, wouldn't you? Most banks do that, not all of them, but most banks do that. Sadly, with Cynergy, you're going to have to open up a new account with the bank, this new release that they've got with a higher rating, and then transfer your money across. And if you're an ISA, remember, very, very important, you do transfer it across. Don't withdraw it and put it in, otherwise you'll use your allocation. Now, I did this. I've got some money in a cash ISA, not a huge amount, but some money in a cash ISA. And it took me maybe 10 minutes to open up the new account. It took a couple of days for that money to transfer over, but it did happen. So just have a look. If you have a Cynergy account right now, just make sure you are getting the best possible rate out there. Similarly, Tesco Bank has done something as well. Same sort of thing. If you want to get the best rates on their easy access account or the easy access ISA, you would also need to either open an account or get in touch with them and ask them to give you the higher rate. They won't do it automatically. Of course, you might be better off, I want to talk about the best rates right now, just taking that money and putting it in a higher paying account anyway, because it might be more than you're going to get from Tesco or Cynergy right now. And the last bit of news for you, before we get into those best buy tables, is around the green savings bonds. They launched in October last year and they were a massive disappointment. They were a 3-year fix. It's from NS&I, from the government, basically, National Savings and Investments. 3-year fix. It paid something like 0.6%, 0.65%, I think, back then, which was awful. They upped the rate to 1.3% in February, which is also pretty bad. Now they're offering 3%. So it's a massive increase. And if you are interested about your money doing the best it can ethically, you might be thinking, all right, 3%, that sounds pretty good. I'll have some of that. However, it's still not very good when you compare it to the other rates out there, as I'll explain in a second. I think you're probably better off avoiding this one because you are locked in for 3 years with this rate. Okay, that is what you're going to be stuck with. And if we do see more improvement, greater improvement in the base rate and therefore in savings rates in the coming months, that 3% is also going to look pretty poor. Can't promise you that's going to be the case. I might be wrong, but I think that's most likely. And you can get a better rate than that in a 1-year fix, still with some green credentials. And I'll talk about those shortly. So I would ignore that. And also, quick reminder, if you are fixed, if you've taken out one of the previous issued the green savings bond, you're stuck on those rates. This doesn't improve for you there either. So let's have a look at some of these routes, because this has been like some massive movement in the last few weeks, really, maybe in the last week. It's been a month since the last base rate announcement. And bit by bit, it does always take time for those kind of any changes to come along. And again, as I've said before in these updates, they don't necessarily pass on all of it or any of it. So don't just assume because there has been a base rate that your savings got better. Definitely hunt around and look for those best deals. So at the top, it's possible that some of these deals, when you watch this, if you watch it a few days into September, a few weeks of September, might already have been beaten. You never know. But this gives you an indication of where things are going. As ever, as I always say, right, make sure you head over to becleverwithyourcash.com/savings, where every single day I am updating the tables. I'm making sure that the best ones are reported on there. So any movement, you'll be able to see it there. I always get comments, someone saying, what about this account? What about that account? Well, maybe that rate has improved since I made the video, or maybe it's not the best one and I've left it out deliberately because there are better ones. I can't list every single account here on the video, but I can list a good top dozen accounts or so for each of the different categories: easy access, regular savers, 1-year fixes, ISAs, all those things over on becleverwithyourcash.com/savings. So let's start with easy access, because this has been the last couple of days, big movement. Last month I told you how Virgin Money had moved rates up to 1.71%. It wasn't long before that was beating, and we've seen a bit bum, all these different accounts getting better than that. Just a few days ago, Gatehouse went to 2% for an easy access bank account. 2%, the first time we've seen that for I can't remember when you else got 2% on an easy access account. Then a few days later, our Ryan account went on top of that. They beat it again with 2.1%. They really want to be at the top of that table. So this is obviously, talked about Chase still offering 1.5%. You can get 2.1% now. That is a very significant difference. It's well worth thinking about moving your money. Again, yes, rates will move. We like to see other accounts get up to this, maybe go past it. But if you keep waiting for other accounts to catch up, they might never do that. So I would just move your money over right now if you've got a sizable amount, if you work out the difference it's going to make to you in the short term and in the long term. Now, what I should say about these two accounts, the Al Rayyan account does have a £5,000 minimum deposit, which might be a bit steep for you. Likewise, the Gatehouse one, that is a £1,000 minimum. So again, that might be more than you've got. If you have got less than that, and I'm going back to this in a minute, then maybe you will want to look at the likes of Zopa, 1.81%, which gives you a minimum of £1 you can put into that account. So there are options for you depending on how much you've got to save. There's movement too on 1 year fixes. This is with Ali United Bank via Raisin. Raisin is a marketplace with loads of different savings accounts on that you can pick and choose from. If you're new to them, there is a £30 bonus. It was 25 quid. It's now gone up to 30 quid. Your money has to stay in there for 6 months. It has to be at least 10k. But if you are going to take advantage of a 1 year fix, that 6 month thing's not going to be a problem. But 3.5%, that is pretty tasty. 4 weeks ago when I did this update, the best 1 year fix was 2.76%. So that is a large increase, more than the base rate announcement would kind of account for. So they've really gone for it. They really want your money. Next one's down below that, around 3.3%. So again, there is a big increase going on with those 1 year fixes. Now, if you take out one of these, as I say, the risk is that if other rates improve elsewhere, your money is locked away. You can't access it. You're going to lose out on those better rates. But it feels to me between 2.1 and 3.5%. That's enough of a difference that actually, if you lock your money away now, easy access accounts have to move up a huge amount to cover that. But again, you need to do the maths for yourself, work out what is best for you. What else we've got going on? ISAs. Now, ISAs have been for a long time irrelevant. I did a whole video about them a while ago, but because of increasing interest rates, then that chance of getting close to the personal savings allowance is more and more touch and go for some people, particularly those with large amounts of money. And this could continue to change. If you missed it, I did a whole video just the other week looking about when you'll pay tax on your savings if you are close to those personal savings allowances. But anyway, now we've got an easy access ISA from Virgin Money paying 1.75%. That is really good. That is better than a lot of the easy access accounts alone, let alone in the ISA. So if you are thinking about protecting your money, ring-fencing your money in an ISA, or you've got some ISAs elsewhere, you can transfer in, that is a pretty decent rate. And a few others are starting to compete with that as well. So it's one to keep an eye on. And also regular savers, there's been some movement here as well. The nationwide Flex regular saver, which you can only get if you've got a Flex, one of their current accounts, and their Start to Save regular saver, which is open to anyone. They have upped their rates from 2.5% to 3%, so that's a nice little bit of movement there. And NatWest and RBS on the 12th of September, they will improve their digital regular saver interest rate to 3.82%, which is great as well. That one works slightly different to other regular savers because it's only paid on the first £1,000, but it lasts for longer than 12 months. Basically, as long as they're offering a rate, you'll get that interest on there. So definitely one to look at. And I have spoken about regular savers here on the channel before. Well, there we go. Lots to pack into the video. If you want to make sure you get daily updates on the best rates, head to becleverwithyourcash.com/savings. Make sure you leave a comment below, hit that like button, and check out these videos to help you with your money.